Hi, I'm Joel Cherdak, President of Public Insurance Adjusters of California. One of the major issues that is affecting policyholders today is the rising cost in property values. So whether it's a commercial building or whether it's a residential property, we've seen exponential increases in property values over the past year, which is great. So if you're a homeowner or a property owner or a commercial building owner, then you've seen the value of your property skyrocket since the beginning of the pandemic. One thing that people don't think about is the amount of insurance that they have on the properties that they own. So a requirement that you have with your insurance carrier for the amount of insurance that you have on your property is that you must insure your property up to 80% of the value of your property. It's called the Coinsurance Rule. So your insurer will pay 100% of the replacement cost if you have a replacement cost policy, as long as you are insured to 80% of the value of your property. So what does that mean if the value of your property's gone up? Well, while that might be great for you in looking at the value of your property, if that value now pushes the value of your property to the point where you are less than 80% insured, then that means if you file a claim, you're only going to get paid for that percentage of the value of your property for which you're insured. So let's say that you're only insured to 70% of the value of your property. That means that if you have a claim, that the insurance company is only liable to pay 70% of the replacement cost on your property. So one thing that I advise all of my clients to do is review their policies, compare it to the value of your current property, and make sure that you're insured to at least 80% of that value, so that if you do have a loss, you'll get reimbursed in full for the value of the loss.